Imagine unlocking the door to your dream property investment without the usual income verification hurdles. Intrigued? Keep watching to discover how DSCR loans can make this a reality. Welcome to our guide on DSCR loans, a game changer for high-income investors and financial advisors looking to maximize returns in the Texan real estate market. So, what exactly is a DSCR loan? It stands for Debt Service Coverage Ratio, a loan that qualifies you based on the property's cash flow rather than your personal income. This type of loan is particularly beneficial for high-income individuals with significant assets, but non-traditional income sources that don't meet conventional loan requirements. Lenders use the DSCR to assess a property's ability to meet its debt obligations. It's calculated by dividing the property's net operating income by its total debt service. A DSCR greater than 1 means the property generates enough revenue to cover its debt commitments, making it a safer investment. Why should you consider a DSCR loan in Texas? The state boasts a robust economy, diverse population, and a solid job market, making it a prime location for real estate investment. Cities like Austin, Dallas, Houston, and San Antonio offer excellent investment opportunities with rising demand for rental units and property appreciation. Did you know that home prices in Texas increased by 0.5% year over year in July, and the number of homes sold rose by 1.0%? These stats highlight the state's thriving real estate market. From 2000 to 2022, Texas gained over 9 million new residents, further boosting the demand for rental properties. To apply for a DSCR loan in Texas, start by preparing your financial documents, including tax returns, property income statements, and bank statements. Next, check your credit score. Ensure it meets the minimum requirements of your DSCR loan lender, typically above 620. Calculate your DSCR to understand the maximum loan limit for your property. This will help you gauge your eligibility. Choosing the right lender is crucial. Research various lenders, evaluate interest rates, lending conditions, and customer service to find the best fit. Once you've selected a lender, submit your application along with all required documents. The lender will then conduct underwriting to assess the property's cash flow and loan risk. If your application is approved, you'll receive a loan commitment with terms and conditions. The final step is closing the loan, where you'll sign the necessary documents and provide the down payment. To maximize your DSCR loan in Texas, stay updated on real estate trends, maintain a healthy DSCR, and seek professional financial advice. The benefits of choosing a DSCR loan in Texas are numerous, including no state income tax, strong economic growth, and a favorable regulatory environment. Texas's high population growth also contributes to a robust rental market, making it an attractive option for real estate investors. While DSCR loans offer higher loan limits and flexibility, they also come with larger down payments and higher interest rates. Be mindful of market risks that could impact rental revenue and property values. Ready to unlock the potential of DSCR loans in Texas? Contact us today to get started on your investment journey. Your dream property is just a loan away. What is a DSCR loan? A debt service coverage ratio, DSCR loan, helps real estate investors qualify based on the property's cash flow rather than the borrower's income. Why choose a DSCR loan in Texas? This form of loan is especially helpful for high-income individuals who may have significant assets. It is ideal for those who need more traditional income sources that meet the requirements of conventional loans. Lenders use the DSCR to assess a property's capacity to meet its debt commitments. It is calculated by dividing the property's net operating income, NOI, by its total debt service, principal and interest payments. A DSCR of more than 1 implies that the property generates enough revenue to meet its debt commitments, whereas a DSCR of less than 1 shows that the property is not producing enough income to meet these debt obligations. Texas is one of the best places for real estate investment because of its influential economy, diverse population, and solid job market. Here are some interesting stats. Home prices in Texas were up 0.5% year over year in July. At the same time, the number of homes sold rose 1.0%, and the number of homes for sale rose 21.3%. From 2000 to 2022, the state gained over 9 million new residents. Over 25% of all out-of-state moves into Texas are from California, followed by 6.7% from Florida, 4.9% from New York, 4.4% from Washington, and 4.1% from Illinois. To apply for a DSCR loan in Texas, you have to follow the following steps. Step 1. Prepare your financial documents. Collect your financial document, which includes tax returns, property income statements, bank statements, documents that showcase the property's cash flow. Step 2. Check your credit score. Make sure that your credit score matches the minimum requirements of your DSCR loan lender. If your score is below 620, take steps to improve it before applying for the loan. Step 3. Determine your DSCR. Calculate the DSCR using the formula above for the property you wish to finance. It will also help you understand the maximum loan limit for your property. Step 4. Choose your lender. Choosing the right lender to fulfill your loan requirements is crucial. Research various lenders for DSCR loans in Texas. Evaluate interest rates, lending conditions, down payment, and customer service. Step 5. Submit your application. Fill out the application form for your chosen lender. Make sure to attach all the required documents. Step 6. Underwriting and approval. The lender will study your application and conduct underwriting to evaluate the cash flow and overall loan risk of the property. If your application is accepted, you will receive a loan commitment with terms and conditions. Step 7. Close the loan. Once your application is approved, you will proceed to the loan closing. The lender will ask you to sign the required loan documents and provide the down payment. Tips for investors. Maximizing DSCR loans in Texas. Keep up with Texas real estate trends to recognize risk factors and high-growth locations. To increase your chances of loan approval and mitigate market fluctuations, keep your DSCR above the minimum. Pay attention to property value and long-term growth in rental revenue. Get the advice of a financial professional for a thorough investing plan. Hire professional management services to increase your rental income and maintain a healthy DSCR. Benefits of choosing a DSCR loan in Texas. No state income tax. Texas is one of the few states in the United States that does not levy a state income tax. Strong economic growth. Texas has a thriving economy fueled by businesses such as technology, oil, healthcare, and finance. Favorable regulatory environment. Texas has a reasonably investor-friendly regulatory environment, including landlord-tenant regulations that benefit property owners. High population growth. Texas's population has expanded significantly in the last few years, driven by both local and international migration to the region. DSCR loan requirements in Texas. Credit score. You need to show a credit score above 620. Minimum DSCR. Most lenders require a minimum DSCR of 1 to 1.2. Property type. DSCR loans are available for diverse investment property types. Down payment. Most lenders require a down payment of 20 to 25% of your property's purchase value. How DSCR is calculated. DSCR equals net operating income, NOI, total debt service. For example, a property generates a net operating income of $100,000 annually. So, the DSCR will be the total debt service by the lender is $80,000. 100,000, 80,000 equal 1.25. A DSCR of 1.25 shows that the property generates 25% more income than needed to pay debt service, making it more likely to qualify for a loan. Pros and cons of DSCR loans in Texas. Pros: no personal income. Verification. The main focus of lenders when providing DSCR loans in Texas is on the property's cash flow instead of the borrower's traditional income. Flexibility. DSCR loans are suitable for different types of properties and offer more options in financing structures. Higher loan limits. With DSCR, you can get higher loan limits up to $2-3 million. Higher returns potential. Texas has a really strong real estate market, which increases the chances of higher returns. Cons: larger down payments. Since the DSCR loan depends on the property's cash flow only, lenders ask for a bigger down payment to mitigate the risk. Higher interest rate. Compared to conventional loans, DSCR loans can be risky for lenders. Market risk. Market conditions, like any other real estate investment, can fluctuate. If you need more information about DSCR loans in Texas, then feel free to contact us today. It is one of the most beneficial features of this loan for investors with non-traditional income. A downturn in the Texas real estate market may have an impact on rental revenue and property prices. It lowers the DSCR, leading to loan default. Therefore, they ask for higher interest to cover the risk. It includes refinancing one or more properties or buying properties with both commercial and residential purposes. This is because the property's cash flow determines the loan limit. The DSCR loans help investors leverage their money to maximize their profits.